In conversation with Krishnan Ankleshwaran, he's the Group CFO of Apollo Hospitals. They came out with numbers, 20% top line growth and a 50% growth as far as the operating profit and bottom line is concerned. But let's get in more granular detail in terms of how the numbers went and what's the way ahead. Thanks, Krishnan, for speaking to BloombergQuint. First of all, if you can give us a sense, which were the hospitals that led to the revenue growth this time around, and which were the hospitals that pretty much didn't perform as per your expectation this time?
We saw we saw all-round performance this quarter, and it was quite healthy across both our mature hospitals as well as the new hospitals. The mature and it was all led by volumes in particular. And even inside the volumes, if you look at it, the centers of excellence, specifically, we saw good performance coming from cardiac, oncology, orthopedics, and neurosciences. So if you look at by the clusters, we saw a growth of almost around 14% in our Chennai cluster in this quarter, 12% in Hyderabad, 17% in Bangalore, again 14% in Calcutta, 11% in Delhi, and 10% in Ahmedabad. So I guess overall the quarter has been a good quarter for us. The top line grew by almost around 18% for the quarter to 2,463 crores. Wherein healthcare services grew by 15% and standalone pharmacies grew by 22%.
On a consolidated basis, what has been the average length of stay as well as average revenue per occupied bed for your hospitals in the second quarter?
So the average length of stay now is almost around 3.99. That's the average length of stay, actually 3.85, I'm sorry. And the average revenue per occupied bed now is 36,982. And it has been a growth of 10% that we have seen in ARPOB. This is because of a combination of A, the case mix, as I said, which is the focus on the centers of excellence, and B, we've also seen a lot of increase in laparoscopic cases and non-invasive surgeries across our system.
You also spoke about the pharmacy revenues, which grew. Give us more updates on what's the outlook here and what's the update on the restructuring plan there.
So the pharmacy revenue, I think this quarter, as we, even as if I reflect back, we saw 4 milestones in this quarter which we achieved from a business perspective. One is the mature hospitals. Overall, we achieved a 70% occupancy, and the mature hospitals return on capital employed now is over 25%, which was one milestone that we achieved. The second one was clearly on the pharmacy side, where we have been guiding the markets for the past several quarters now that eventually the pharmacy business will get to a 6% EBITDA margin, and as the private label, private label growth increases to almost around 8% of overall top line, we have been suggesting that it will get to a 6% EBITDA margin. So this quarter, we saw the pharmacy business get to a 6% EBITDA margin for the first time, and which also returned and return on capital employed of 25%. This was the second achievement that we saw in the quarter. And Apollo Health and Lifestyle, which was our retail foray into, which has the day surgery centers and the cradle format for birthing and diagnostics, we had guided that we would become break-even by this quarter, and I'm happy to say that we have become positive in this quarter on that front as well. On the pharmacy to come in particular, the private label now at 8% and the business reorganization is well underway. I guess we should be seeing the front end getting transferred into an SPV by Jan end. That's the plan.
Okay, 2 things you spoke about AHLL. Firstly, it's already broken even, as you pointed out. When will it start making cash profits? And secondly, among the newer hospitals over the second half, which of these hospitals will break even?
So AHLL will become cash positive from next year. When you're saying cash profits, we mean after the interest, because currently it's become EBITDA positive. It has a plan to get to single-digit EBITDA margins by end of the year and double digits by next year. And by that time, we are quite positive that it will start turning cash positive as well on AHLL. Your other question was around new hospitals. New hospitals, we have seen a very well For example, we saw a very good uplift, especially in Navi Mumbai, where now the occupancies have crossed over 200 beds. The quarter saw us return an EBITDA of almost 10 crores from Navi Mumbai, which means the run rate of 40 crores from Navi Mumbai alone is based on the current quarter. Overall, all our new hospitals, be it Malleshwaram in Bangalore, be it the Chennai cluster, be it Vizag, we have seen very good growth. Nasik is the only hospital that we still think there is some room to turn it around a bit, which will also happen in the next quarter.
What's the update on the pledge issue? When will the funds from the insurance stake sale come in, and what is the optimum pledge level that the promoters are now looking at?
So we have already guided the market that the promoters should be looking at the 20 to 25% range for the overall pledge levels. After the monies from the insurance business also comes in, we are awaiting the last leg of regulatory approvals, which I guess should come in shortly. And once that's done and the IRDA approval is gotten, I guess over the next 1 month, we are hopeful that we should be able to get those money too for both Apollo Hospitals as well as the promoters, and wherein the pledge should then get to the numbers that they have guided.
And my final question, Krishnan, is what measures are you looking at in terms to strengthen the balance sheet?
So our balance sheet is quite strong. If you look at the current debt in the books, currently we are at a net debt in the standalone books of almost around 3,000 crores at the end of the quarter. Even if I look at the consol books, it will be almost around 3,300 crores as the overall debt. If you look at this year, we are well on path to achieve a 1,200 plus crores on the overall EBITDA for the full year. So, a debt EBITDA of close to 2.5 is what we would be, and debt equity is well below 1. So I guess, there is no concerns on the Apollo balance sheet at all. The concerns that the market had was more around the pledge, which I guess is also getting addressed as we speak. So I don't think, and going forward from the next year, you would see a healthy cash flow accretion of almost around 400-500 crores, even after the routine capex, interest, and working capital, etc., which should all, be helpful for bringing down our debt even further.
Okay, Krishnan, we leave it at that. Thank you so much for speaking to BloombergQuint, and all the best for the quarters going ahead.
Thank you so much.
Thanks.